Hello, welcome to the weekly technical analysis review for Monday, September the 10th. I'm Rafi Boyajan, currency analyst at XM.com, and the pairs we're going to be looking at for this week are the euro dollar, the Aussie dollar, and the pound yen. Starting first with euro dollar, we can see that the near-term bias is neutral. RSI is more or less flat, just below the 50 neutral level. There is a bit of an upside momentum today, though. But there's resistance coming from the 38.2% Fibonacci retracement of the up leg from 1.13 to 1.1733. If we do see a strengthening of that upside momentum, we could see prices heading towards the 50-day moving average, which is just below the 23.6% Fibonacci at 1.1630. So a key resistance area around 1.1630. A break above that, we could then see euro dollar targeting that August peak of 1.1733, and above that we're likely to see the next resistance coming at 1.1840. If you do see though euro dollar losing that upside momentum and breaching that immediate support, which is coming from the 50% Fibonacci at 1.1517, we're likely to see the pair heading back towards that near 14-month low 1.13, which it touched back in August. If it drops below 1.13 handle, the next key support would likely come from the 161.8% Fibonacci extension at 1.1033. Let's now move on to Aussie dollar. We can see that the pair at the moment is looking rather bearish. In the near term, RSI has flattened though just above the 30 oversold level, and there's a bit of an upside momentum. Though if you look at the histogram, at the MACD histogram has actually fallen even sharply below its red signal line and way into negative territory. So it would need to see much sharper upside momentum in order to ease that downside pressure it's facing in the near term. Prices did find support twice on Friday and earlier today at that 2.5-year low of 0.7091. That's the 161.8% Fibonacci extension of the up leg from 0.7202 to 0.7381. A breach of that support, we could see Aussie dollar heading towards the 0.70 handle, and below that support would likely come from the 261.8% Fibonacci extension at 0.6912. But if the upside momentum does strengthen in the coming hours, and we do see prices heading even sharply higher, there's likely to be resistance at that 0.72 handle, which we can see did act as a major congestion area in late August. A break above that level, we're likely to see Aussie dollar making its way to the 50% Fibonacci at 0.7291. A break above the 50% Fibonacci could help shift the focus back to the upside and be able to target the 50-day moving average, which is currently at the 23.6% Fibonacci at 0.7338. In the medium term, though, we can see the Aussie dollar is still in a downtrend, and that bearish outlook isn't likely to change anytime soon. Our final pair for today is the pound yen. We can see pound yen is looking fairly neutral in the short term, with a slight upside momentum. We can see stochastics having fallen into oversold territory are now sloping somewhat upwards and trying to reach the 50 neutral level. Prices have been hovering between the 50-day and the 20-day moving averages over the past few sessions. So the 20-day moving average is providing immediate support at around 142.74, and then the 50-day moving average providing resistance around 144.60 at the moment. Just below that is the 38.2% Fibonacci retracement of the longer term up leg from 124.05 from way back in 2016 to the 156.60, which was a peak from late last year, early this year. So a break above that Fibonacci level, we could see prices heading towards that descending trend line, currently in the range of 146.50. If prices were, though, to break below the 20-day moving average, we could see pound yen heading towards that one-year low of 139.88 from back in August. That's near the 50% Fibonacci at 140.32. A breach of the 50% Fibonacci would shift the focus back to the downside, and then we could see the next support coming from the 61.8% Fibonacci at 136.48. That's it from me. Thank you very much for watching and have a great day.